Yeah.
Hey, what's up everybody? Welcome to Ala's World of Finance. I hope you're all having a fantastic day. So today we're going to be talking about my 3 biggest stocks that I'm still investing in for the month of August 2017. Now before we get started, I just want to give you guys the results for the Ala's World Consensus poll question, which we had a little bit of a while ago, and so I want to finally give you guys the results here. So the question was, which is your favorite gaming stock? And the options were Activision Blizzard, EA, and Take-Two. And so we have the results here. We had 15 votes, 80% went to Activision Blizzard, 13% went to Take-Two Interactive Software, and then 7% went to Electronic Arts. So pretty much Activision Blizzard completely dominated this poll question. It looks like most of the viewers, including myself, are more interested in Activision Blizzard and are more bullish on Activision Blizzard. And just a quick disclaimer, I am invested in Activision Blizzard. It's my 4th biggest stock. But today we're going to be talking about my 3 biggest stocks, and those are Nintendo, AMD, and Disney. And so our new poll question for Ala's World Consensus is, which one of those 3, if you had to choose, which one of those 3 do you like the most? So Nintendo, AMD, or Disney? Just leave a comment below, and all you have to do is just leave a comment saying Nintendo, AMD, or Disney, and I will tally up all the votes, and I will have the results in a future video, and we'll see what you guys like more. So anyway, that's that, and let's go ahead and get started here. We're going to start with Nintendo. So why is Nintendo my biggest stock, and why am I so bullish on it? Well, the main reason is because of this guy right here, the Nintendo Switch, which I've shown many times. And this is a hybrid console that is portable, but can be docked at home into a docking device and be projected onto your television. And there's really no competition in the market against that. There was the PlayStation Vita, which was a little bit higher quality, but that was more of just a handheld on-the-go device, kind of similar to like a Nintendo 3DS, but the 3DS was a lot lower quality. So this one brings home console quality to a portable console. I don't know if I said that correctly, but it has like home console quality that you can take on the go, and so it's revolutionary in that sense. And then in reverse, it's a portable console that you can, dock at home and play on the big screen. So it's revolutionary in that sense. It's a hybrid console, and there's not really any competition for it. So that's why it's doing very well, and that's why I think that it will continue to do very well and really help Nintendo stock. Now, speaking of Nintendo stock, their price right now at $42.39. If we look at their performance, 5-day performance up 1.63%, 1 month up 1.36%, and they've been in my 1 month buying videos for the last few months. And 3-month performance up over 33%, year-to-date up over 63%, and then 1-year performance up around 64%. 22 analyst ratings on MarketWatch with an average of overweight. Okay, so let's look at their earnings, because they recently reported earnings for the last quarter. So Nintendo reported revenue of 154.07 billion yen versus expectations of 136.53 billion yen, so they smashed expectations. Operating profit was at 16.21 billion yen versus the low forecast of 9.52 billion yen, so they smashed those numbers as well. And revenue was an increase of almost 150% year over year. But you have to keep in mind that last year they had the Nintendo Wii U, which was a huge failure. Now they have the Nintendo Switch, which is a huge success. Now, when talking about the Nintendo Switch and their sales, in this current quarter that they just reported, they had 1.97 million units sold. In the quarter before that, the March quarter, they had 2.74 million units sold. So they had a lot more sold. And in that previous quarter, the Nintendo Switch was actually launched on March 3rd, I believe. So it just had 1 month to gather up those sales, whereas this quarter we had 3 months. So that's a decline, right? So that's not good. But you have to keep in mind that Nintendo was experiencing huge shortages and was basically competing with Apple to get these parts. And so that really affected them. And so it was really because of the shortages, because the demand was still there. Anytime that it would get into the store, it was immediately sold out, and lines went like around the block, and it's been really hard to get a Nintendo Switch, but the demand is still there. So as long as they can work out those shortages, then I think that they will be fine. And they kept predictions low at 10 million units for the fiscal year. That's their forecast for that. And I think that as long as they can ramp up production, which they claim to be doing, I think that they will easily smash those numbers, and I think that that will drive the stock up even more. Now, when speaking about those shortages, we can see here there's a quote from Serkan Toto, and he's the CEO of Japan-based video game consultancy firm Kanten Games. And they told CNBC, they said, "I think this basically is a testament to how well the Switch is doing. The demand for the Switch is real. It's not sold out only because Nintendo can't produce enough units, but because the demand for the device is making it scarce." So yeah, absolutely. I mean, I completely agree with that. And if they do ramp up production like they claim to be doing, I think that they will continue to beat numbers. Now, when talking about Switch games, we can see here that total Nintendo Switch games, so since March, total Nintendo Switch games are at 13.6 million. That is a lot, guys. And if you look at the Nintendo Switch sales, that's basically a 3-to-1 game to console attachment ratio, almost, right? Almost a 3-to-1, so that's very good. Now, when looking at some other games here, Mario Kart 8 Deluxe was released in late April. Okay, so just late April, and it sold 3.54 million units in the quarter in basically 2 months, right? Because it basically only sold in May and June because it was released late April. And ARMS, which is a brand new IP, was released on June 16th, and it sold 1.18 million units in that quarter, and it was just released basically at the end of the quarter. On June 16th, only about half a month worth of sales, and it sold over 1 million, and it's a brand new game. I mean, that's crazy, guys. Zelda was released on March 3rd, and up to date, it has 3.92 million units sold, and in this last quarter, it sold another 1.16 million, but in total, it's 3.92. And if you look at that versus Mario Kart was released almost 2 months later, and it's almost caught up with Zelda. So Mario Kart is doing extremely well, and it will probably continue to do well, and it will probably pass Zelda. And Zelda is many critics' Game of the Year. It's receiving Game of the Year awards everywhere, and it's receiving 10 out of 10. So it's an amazing game. Now, Splatoon 2 just released on July 21st, so it wasn't counted into this earnings, but Splatoon 2 came out, and it actually broke the eShop. Like, I have a quote here. It says, "The Switch eShop, for all intents and purposes, seems to be down for the time being. Nintendo is being hit with a wave of customers eager to buy Splatoon 2, and it sent the eShop into a dizzying downward spiral." And none of those other games have done that. So Splatoon 2 has to be selling extremely well also. And we even, in previous videos, we also looked at Amazon charts, and Splatoon 2 was like at the top on a lot of different charts and stuff. So it's been selling very well. Now, if that wasn't enough, we can look at mobile gaming for Nintendo, and even that is doing really well. So last year they had Pokemon Go, and at the end of the year they also released Super Mario Run. Now, Pokemon Go is not owned by Nintendo, but they have a stake in it. They have a stake in Pokemon. And Super Mario Run is owned by Nintendo. And when looking at it here, it hasn't been too long that they've had those. But when looking at revenue from their mobile and its intellectual property licensing, they earned 9.06 billion yen, which is up almost 450% from the 1.6 billion yen recorded in the same period last year. That is insane, guys. And when looking at what this CEO said, Toto, that we just spoke about a second earlier, Toto said, "These numbers are very stable, but it's the tip of the iceberg for what Nintendo could do using the right IP and business models in the future, but it's already promising." Yeah, absolutely. And so that also helped the stock continue to go up. So in conclusion, I really like Nintendo because of its strong quarter performance despite Nintendo Switch shortages and the online, the online gaming chat application. The reviews weren't good for that. So I was worried about those two things, shortages and the online chat reviews. But it looks like they were still able to come out with really strong numbers, and they were still able to do really good. So it was kind of a testing quarter, and they still outperformed. So I don't see any reason why they can't outperform later on when we go into some easier quarters like holiday quarters and things like that. Now, there's also future games coming out. So we have FIFA coming out, which I think will do very well because now you're going to have FIFA on the go. Tons of people are going to buy that. You'll also have Elder Scrolls. You're going to have NBA 2K, which will also do very well. Mario Odyssey, which is going to do amazingly well because Mario always does really well. It's probably going to beat a lot of these games. And you will also have Pokemon, which is slated to come out probably late 2018, possibly 2019. So even long term, Nintendo is just looking fabulous. Like, it's looking like a great stock because it's a good stock right now, and since Pokemon is coming out later on, it's also a good long-term stock. So not really too much concern there. So that's Nintendo. Now let's talk about AMD. Okay, so now let's look at AMD with Ryzen CPUs, Vega GPUs, what they're doing with EPYC in the server market. There's a lot of things to look forward to still. So let's look at their stock and let's dive into it. So looking at their performance, 5-day performance up 0.5% only despite the strong earnings, and so we're going to talk about that in a second. 1 month performance up over 11%, 3 month up around 5%, year to date up over 23%, and then 1 year performance up over 100%. 30 analyst ratings on MarketWatch with an average of hold. Okay, so now looking at their stock here, we can see that on Monday it was up over 2%. Tuesday it went down 0.35%. On Wednesday it went up because we had the really strong earnings, went up 4.61%, and then on Thursday it dropped 4.34%. And then on Friday, it went down another 1.2%. So what happened, right? Like, they had a really strong earnings and they went up to like their new 52-week high. So why did they drop? Well, the reason that they dropped, even though they had a really strong earnings report, the reason that they dropped is because they were downgraded by a couple analysts. So BMO downgraded shares of AMD to market perform along with a $15 price target. Citigroup, and I'm a new, like, I hate Citigroup now, but Citigroup reiterated a sell rating while lifting, thank you, it's so generous, while lifting its price target from $4 to $5. Wow, thank you so much, Citi. Thank you. That's incredible, man. That reflects almost a 70% downside from Wednesday. That is incredible, guys. Like, they're so bearish. And they say AMD is making low-end, low-margin products. And then Goldman Sachs, what a surprise here, said they're also bearish on AMD, and they gave a $10.60 price target on AMD. However, Canaccord and Baird issued upbeat estimates on AMD, and they gave a buy rating and outperform rating. And let's see here, I think they both gave it a $20 price target, which is really where I see it going. Like into 2018, I see AMD going into like a $20 price target kind of thing. That's kind of where I see it. Now, another thing that I want to talk about is Intel, because they reported earnings, and I think that Intel may have convinced some AMD longs to panic and sell out, given that even though they did report a 3% year-over-year revenue decline in their desktop segment, their notebook segment actually produced revenue growth of 20% year over year. So that was really strong. But I think a big reason for that is because AMD isn't really competing with them in that area yet. But if you listen to AMD's earnings call, which by the way we streamed, so if you were listening to that, you would know that Wells Fargo actually asked AMD about revenue from Ryzen Notebook at the end of the year. And Lisa Su responded to this, and so I'm going to quote her here. She said, "Yes, so Ryzen Notebook is on track to launch for the holiday platform sales, and so you should see OEMs launching Ryzen Mobile for the holiday period. So yes, we will see revenue in the second half of the year." Okay, so very good. So I think that they can kind of start chipping away from Intel in that sense. And Intel hasn't really seen any negative effects yet from Ryzen and EPYC, but I think that will absolutely change as we progress into these other quarters. So moving forward, I think that we will start to impact Intel. Now let's talk about EPYC for a second. So Canaccord Genuity, they have reported that with EPYC in the server market, they estimate that AMD can earn over $100 million in revenue just in 2017, and that it will be an over $1 billion server business by 2020. And AMD has already announced a lot of partners, and some of these partners are pretty big names, and they include Microsoft Azure, Dell, Lenovo, HP, Samsung, Asus, and more. So I think that that's fantastic. Now let's take a look at their earnings really quick, because they just reported that. They announced EPS of 2 cents versus expectations of 0 cents. Revenue came in at $1.22 billion versus expectations of $1.16 billion, which is up 19% in the same quarter year over year. And they still gave really strong guidance for quarter 3 of revenue, a revenue increase of 15% year over year at $1.5 billion versus expectations of $1.39 billion. And they said that annual revenue growth should be in the mid to high teens percentage versus previous estimates of low teens percentage. So I also think that that is fantastic, really good earnings and really good guidance. Now, one concern that a lot of investors and analysts have about AMD is their reliance on cryptocurrency. And I've said this in the past, and I've actually received some heat for it, but I've said that I don't really think AMD cares that much about cryptocurrency. Now, if you listen to the last earnings call for the last quarter, Lisa Su commented on cryptocurrency, and we were streaming it. And during the stream, I actually said, like, there was a moment where she said it, and I actually said, yeah, I don't think AMD really cares about cryptocurrency. So what I'm going to do is I'm just going to quote Lisa Su from this last earnings call, and then you guys can make your own opinion on it. But this is what she said on it. She said, relative to cryptocurrency, we have seen some elevated demand, but it's important to say we didn't have cryptocurrency in our forecast, and we're not looking at it as a long-term growth driver, but we'll certainly continue to watch the developments around the blockchain technologies as they go forward. And Lisa Su has also said, if you look at GPUs across the world, the inventory in the channel is actually quite lean. And so we're working on replenishing that inventory. Our priority, though, really is on our core market, which is the gaming market. So I kind of see cryptocurrency as just like an added bonus. Like AMD does very well with it, and you know their GPUs do very well in cryptocurrency, but I don't think that that's their main focus. And so they're not relying heavily on it, which is a good thing, but I think that it's a market that they will continue to monitor, and if they need to make adjustments and if they need to make specific GPUs for that market, then I think that they will, you know, but it's not an area of concern. I see it more as an area of just an added positive, more of like an added bonus in my opinion. So I think it's fine. Now, when giving an overall conclusion, I think that AMD doesn't need to dominate a lot of these different markets, and I think that's why a lot of investors and analysts are bearish on AMD, because they're kind of putting up AMD against Nvidia and Intel, and they're saying, oh, AMD like has to win these markets. I don't think they have to dominate. I just think that they need to compete, and as long as they can do that with all of these new products that are coming out, I think that they will continue to do well, and they'll continue to have strong quarters moving forward, and little by little start chipping away at some of these markets. And that's why I'm holding my $20 price target. It's just my opinion, not really anything based on that, but I kind of just feel like it'll be around $20 per share going into like 2018. That's just my opinion though, just my opinion. So anyway, that's AMD. Now let's talk about Disney. Okay, looking at Disney, we can see that they have a PE ratio of 19.16 according to MarketWatch. They have an EPS of 5.74, a dividend yield of 1.42%, so they do pay dividends. And when looking at their stock here, they're at $109.96. And when looking at their performance, we can see that their 5-day performance is up about 2.5%, 1-month performance up around 3.5%, 3-month performance they're actually down almost 5%, year to date up a little over 5%, and then 1-year performance up around 15%. And they have 32 ratings here on MarketWatch with an average of overweight. Now, why do I like Disney so much? Well, there's really a lot of reasons to like them, but they obviously have a lot of theme parks all around the world that are doing very well, and they also have a lot of stake in television with ABC, Disney, and ESPN, but we're going to talk about that in a second. But their studio segment, they have a lot of stuff going on there with Star Wars, the whole Marvel universe. They've got Pixar, Pirates of the Caribbean, Frozen, Beauty and the Beast, Toy Story, lots of different blockbuster hits. And in Netflix, they're doing a lot of stuff with Marvel. They have the Daredevil show, Luke Cage show, Iron Fist show, Jessica Jones, and now they're coming out with the Defenders pretty soon, and I think that will do very well also. Now, a lot of the concerns with Disney from investors and analysts are centered around ESPN and Disney's cable network. So let's talk about that. So ESPN is the worst performing media network in Disney's cable lineup. Cable cutting continues to grow, and you see platforms like Netflix continue to rise, and so that's not good for Disney and ESPN and stuff like that. Now, ESPN continues to lose customers as cable companies reduce channel offerings to cut costs, and ESPN charges a premium price. So what that means is that these cable companies are making smaller packages to make it more affordable to the customer, and sometimes ESPN is not including that because they charge a more premium price. Now, ESPN's subscriber base is at 90 million, but it's declining around 4% per year, so that's not good. Now, when looking at Disney's cable networks, it equates to about 30% of Disney's revenue, about 45% of Disney's profitability, But when you look at it here, they made more than $2 billion in operating profit in the last quarter alone, which is really good. But operating margin declined more than 2 percentage points year over year in the last quarter. However, that's mostly offset by other segments and their operating margins. Because if you look at it here, these other segments make up the majority of Disney's revenue, and Parks and Resorts increased their margins by 1.5 percentage points in this last quarter year over year. Studio increased it by 6 percentage points, which is much more than what they were losing in the cable networks. And then Consumer Products and Interactive Media increased it by 4.5 percentage points. So they're more than making up for that. Now, these other segments in this last quarter, theme parks sales were up 9% year over year, with net income up 20% year over year. The studio segment income was up 21% year over year. So they're doing phenomenally well. So there's not really any concerns there in my opinion. So when looking at it, why am I investing in Disney and my conclusion with it? I think that Disney is a household brand name with brands that will never go away in my opinion. And they can dip and struggle just like any other stock, but at the end of the day, they are a relatively safe stock that pays dividends, having increased their dividend payouts in 7 of the last 10 years, with 6 of them being in double-digit percentages. And it's a stock that you can basically hold for as long as you want. Now, it is somewhat of a value stock that still has great growth potential, especially in their studio segment, and I see them making the necessary broadcasting adjustments in the future to adapt to a shifting, more digital market. And I see them making those changes, and I think that that's a good thing. Now, they can also take the huge profits from their cable network segments and reinvest that into their growth segments, or they can just liquidate it altogether and try something new or build upon what is working. But either way, I see it as a positive. So I can't really see them going wrong with either decision there. So that's why I'm so bullish on Disney. So there you have it, guys. My 3 biggest stocks, Nintendo, AMD, and Disney. I hope that you enjoyed the video. Please don't forget to leave a comment below and vote for those 3 stocks. Vote for one of those 3, and I'll have the results in a future video. And I really hope that you guys are enjoying the channel. I hope that you enjoyed the video. And if you are new, please subscribe. If you like the video, please hit the like button. It really helps me out a lot. And if you watch the video all the way through to this very moment in time, then I was going to say that you're AMD, but freaking Citigroup had to come out and give us like a $5 price target. So I'll have to say that you guys are Nintendo, because Nintendo had 150% revenue growth year over year, and you guys are giving my channel like 150% growth in like subscribers if you look at a specific time frame of that. So I don't know where I'm going with this. Thank you guys so much for watching. I really appreciate it. I hope that you all have a wonderful, beautiful day, and that you all take care.